This is the World Financial Report podcast. My name is Randy Marshall. Joining us is our financial and diamond expert, Harold Siegel. We're taping on Thursday, February the 8th, 2018. Our time is 8:12 Mountain. You can connect with Harold at 1-800-432-1022. His website is rarecoloreddiamonds.com. Valentine's Day coming up next week on Wednesday. And I should mention, in British Columbia this weekend, it's a long weekend. They have their Family Day on Monday. Now, the following weekend, the 19th, it's President's Day in the United States, long weekend in Alberta and much of all of Canada with their own versions of Family Day. As we tape today's program, US dollar at 90.07, Canadian dollar down quite a bit from last week, 79.62, gold at 13.1150, silver 16.32, gold silver ratio up dramatically now to 80.17. Silver obviously is really taking a hit. Platinum, 976. Palladium, just below platinum. And that is a bit of a switch. Palladium, 974. WTI, 61.93. Brent, 65.34. Nat gas, 273. Bitcoin in the United States, 8,400. Bitcoin Canadian, 10,500. The Dow as we start the morning, 24,794. S&P, 2,676. NASDAQ, 7,032. TSX here in Canada, 15,330. And we saw incredible stock volatility on Monday. At one point, stock market down 1,600 points. And a lot of people are very concerned about inflation. They're concerned about the debt in the United States that's going to be racked up, the deficits. And as a result, you're seeing the bond market scooch up interest rates because they want to get paid if they're going to take on all this massive debt. And you're looking at a deficit in the United States on a yearly basis of over $1 trillion. So there's a lot of things factoring into what's happening with the stock market. And Harold, give us an update from your perspective on a very crazy week.
It certainly was a lot of volatility for sure. Dow was down at 1.1600, finished down 1,100 and change on the day. And then you saw the market come roaring back. In fact, the next day, it opened down 500 points at the opening. And then market came back and actually finished up 300 points on the day. So you're getting a tremendous amount of volatility. They were calling for about a 10% correction in the market. Some people were calling for more. But again, at this particular point, this is not the big decline in the stock market that we think is going to happen eventually. This was just a correction. And again, the market at this point is down a little bit today. It's down about 100 and some odd points. As we're taping the show, it's down 156, but the market should definitely go higher. Again, until something dramatic happens that's very substantial, the Dow is in an uptrend and will continue to do so. The gold market came down quite a bit this week. It just shows how tied into the dollar the gold market really is, because as the dollar got stronger this week, gold fell substantially. Now, the other thing that's important is that gold came very close to hitting the resistance level of 1350 last week. So we said there was minor resistance at 1350, major resistance in gold at 1380. We never got two closes above 1350 in gold, and now we're down to 1315. So, as a futures trader, which, again, unless you're very experienced, it is not something that I would recommend. But the fact is that when you are trading in these heavily leveraged markets, you do have to know the support and resistance levels if you're going to trade these markets successfully. 1350 in gold, where most people would have thought that would have been a major resistance level and difficult for gold to get above. Believe me, gold will get above 1350 with no problem. It was just a combination of 1350. The market never really was strong through that price, and then the dollar got stronger during the week, and then gold fell back down about $35. Just again to show you how volatile these markets are. Really, there's not a lot of tie-in between gold and the stock market. The real relationship is gold and the U.S. dollar. Now, nothing has really changed. The fact is that we're probably going to see an interest rate rise in the United States. And again, all this just doesn't make an awful lot of sense. Why, on one hand, does it appear that the Trump government wants a weaker U.S. dollar, but on the other hand, they're raising interest rates? By raising interest rates, you're strengthening the dollar. And again, the major reason for strengthening the dollar for any country would be inflation. Now, again, Randy, you brought up inflation at the beginning of the show, but there's really not a lot of signs yet that inflation is rearing its ugly head at this particular point. If we did have substantial inflation at any time, again, depending on what the dollar was doing at that point, we could see a sizable movement in gold, but I just don't see that that's the situation at this time. What I do see is we need two closes above 1350, then we need two closes above 1380. And that's the most important. Two closes above 1380 in gold is going to send that market substantially higher. So at this point, we're still trading in a range. Silver is trading up 4 cents today while gold's down about $4. But silver did get hit, is trading at 1648. The surprising market was palladium. Palladium actually fell the heaviest of all metals. Platinum really hasn't been doing much, but palladium was trading at well over $1,000, is now trading at $980. Bitcoin. We don't trade Bitcoin because it's a cryptocurrency that is backed by absolutely nothing. It's pure speculation, and people are really now starting to see how speculative and how risky trading in that type of cryptocurrency is. Again, you're talking about a currency that most people don't understand. No matter how simplistic you make it sound, it's still a currency that has no backing whatsoever. There's no gold behind it. There's no diamonds behind it. There's no nothing behind it. And the market, when it first came out, was very speculative, but you could have bought it at around $100. We know that the price of Bitcoin hit a high of 20,000, and then negative news started coming out on the market. The market started to sell off substantially, and actually this week, Bitcoin actually dipped not only below 10,000, below 8,000, it hit 7,000, then bounced back up to about 8,500. It would have to really get back over 10,000 in order for it to start to move back into a bullish stance. But at this point here, again, unless you've got a high propensity to risk, that is a market that I would not touch, because Bitcoin and other cryptocurrencies, if they're not backed by anything, then you're talking about a totally naked position in a market that could realistically do anything. And the chances of making money in that market are really slim if you don't know what you're doing. So again, at this particular point, I would shy away from that market unless you're a heavy risk taker and you got a lot of money to burn, because that market is extremely volatile, and there are very negative reports that came out on a lot of those cryptocurrencies. Now, pretty well every currency has no backing. It's not like the U.S. dollar that at one time was backed by the gold standard. Those days are long gone. So you're talking about a currency like the U.S. dollar or the Canadian dollar or any of the currencies that are really backed by only the good word of the country that prints that currency. So the fact is that if the currency went under, or if the country went under financially, like Venezuela is, for example, their currency drops to nothing. And that's what's happening in Venezuela at this point. They've got over 2,000% inflation, and their currency is basically worth nothing, meaning that you could pay $200 for a loaf of bread. That's how the currency can be affected, especially with nothing backing that currency. So at this point here, we had a very volatile week, Randy. We saw the Dow plummet 1,600 points, finished down 1,100 and change on the day, then came back 300 points the next day and is down again today. You saw gold fall about $35 this week due to the fact that the dollar strengthened, but that does not change the outlook of the dollar at this particular point. Again, nothing really has changed in that market. It just, again, shows you the relationship between gold and the U.S. dollar and how important that relationship is to trading that market.
Harold mentioned Venezuela, and this is what's happening in Venezuela. You can see this in our free weekly newsletter, the companion to the podcast. Get it from Harold. Connect with him, 1-800-432-1022. The website is rarecoloreddiamonds.com. and prices are doubling every few weeks. Confounding cash-strapped Venezuelans who are scrambling to find a way to pay for basic transaction. And a Jesuit priest has turned to a novel formula to keep up with skyrocketing costs. He meticulously tracks the price of the humble egg. 6 weeks ago, donations from one Sunday Mass could buy 30 eggs for church events. Now he needs more than 50 Sundays to buy the same number of eggs. How is anyone supposed to make a budget around here, said Father Alfredo Infante, throwing up his arms in frustration as he sat below a painting of Christ's Last Supper. Such is the ordeal in a country stricken with hyperinflation and a government so basically flummoxed that it really doesn't know how to fix the distortions of a crumbling economy, and that is resorting to introducing what is like a Bitcoin-like cryptocurrency. The petro would eclipse the near-worthless strong bolivar, which has lost 98% of its value against the dollar in the past year. The problem is, in a country as broke as Venezuela, the government can't print money fast enough or pay the heavy fees for commercial printers to supply them. Paying with plastic, credit card readers basically seldom work. Things are expected to only get worse this year. The IMF estimates an economic contraction of 15%, which means by the end of 2018, the economy will be half of what it was in 2013. And inflation, and this is the big one, will hit 13,000%, following in the footsteps of Brazil, a slew of post-Soviet countries, and most recently Zimbabwe. Venezuela has become the 57th recorded case of hyperinflation, according to Steve Hankey at Johns Hopkins University. He's an economics professor. But Harold, I know you have a bit of a connection to Venezuela, and that is what's happening there. It is a very serious situation, but you can see that you're looking at just absolute doubling of prices every few weeks, and how can the average person survive? And we've touched on it before and had it in our newsletter, where there are people in Venezuela who are not getting enough to eat. They were at 200 pounds, now they're at 130. There were people at 250 pounds, now at 150. There is massive starvation for the average everyday person in Venezuela as a result of what's happening, and it's very sad to see.
It certainly is. I have partners and friends from Venezuela, and it's impossible to live there. One of the brothers had to get up and move to Trinidad because he still had to do business in that particular area. And the other brother is living here in Florida. But the fact is that they had to bring their entire family over because, as you said, they're starving. 2,000% or higher inflation basically means that something that costs you $100 normally would end up costing you $2,000. So again, you're talking that nobody's making any money. There's very little food to eat. The black market is everything there, and most people can't afford to buy any. So it's a horrible situation. And then again, it just goes back to what I was talking about at the beginning of the show, is how inflation and your currency can affect your life, obviously. And in Venezuela, and we've seen it in other countries before, but it's most prevalent right now in Venezuela, that again, with their dollar as weak as it is, it just doesn't buy anything anymore. And unfortunately, the people there are suffering tremendously.
If you would like to read that story and more, the companion to the podcast is our free weekly newsletter. Get it from Harold, 1-800-432-1022, the website rarecoloreddiamonds.com. Carl Icahn coming out and saying this week the market will one day implode because of these wacky funds using so much leverage. There are way too many exotic leverage products, and one day these securities are going to blow up the market, Carl Icahn told CNBC. The billionaire investor says the market itself is way over leveraged and at some point could implode, but for now he believes that things will bounce back. And he spoke on Tuesday that with CNBC there are too many exotic leverage products for investors to trade, and on one day these securities are going to blow up the market. The market is a casino on steroids, steroids with all these exotic exchange-traded funds and exchange-traded notes. He said the funds, especially the leveraged ones, are the fault lines that will eventually lead to an earthquake on Wall Street. These are just the beginnings of a rumbling. And he says the latest example is an obscure security designed to bet on a calm market, and that's being blamed for causing an influx of selling in recent days. Now, the Velocity Shares daily inverse VIX short-term exchange-traded note blew up a few days ago. Investors were forced to sell when the market went haywire. As a result, Credit Suisse on Tuesday said as of February 20th, it will end trading in this VIX fund, which was supposed to give the opposite return of the CBOE volatility index, the VIX, often referred to as the market fear gauge. And Harold, there were people that in some of these notes got completely wiped out. We're talking about losing 80 to 90% of your money. And that's the thing. They create these products, and do they really know what they do? It seems to me, and Carl Icahn is saying in this story that we have, that we don't. And when he's saying implode, the market over leveraged, casino on steroids, that is a massive warning sign for anyone that is in the market. And it says to me that things have not changed on Wall Street one iota from the financial crisis that we had. It'll probably, Harold, just be a different product that blows up the market next time.
They're always trying to come up with new products. And again, just looking at the derivatives market, which is one of the biggest markets in the world, it's unregulated. It's in the quadrillions of dollars. It's been responsible for Lehman going under back in 2008, the unwinding of these derivatives. And again, I just believe that that's just one other situation that could totally blow up in our faces. So again, the amount of greed on Wall Street is really unbelievable. And again, it's not for the everyday investor anymore. The everyday investor doesn't understand these new products, the leverage, the fees, everything. And even with the Dow hitting the levels that it is, most people lose money when they trade in stocks because they don't know what they're doing. Same thing with real estate. I mean, look at the real estate situation in Canada at this point. It was almost strictly speculation for so many years in Toronto and in Vancouver. And now look what the repercussions are. The prices are so volatile, and that's where most people have most of their money. The fact is that most people's wealth is in their home. And they can't afford for, prices to go up 10, 20% up or down in a year. I mean, we all want to make money. There's no doubt about that. But with making big money comes risk. And most people can't afford the risk because if the market goes against you, the risk is going to, take away all your money. So you really got to be cautious at this particular point. It's very difficult to make money on investments because there's not a lot of investments out there that are safe and give you any type of return. Keeping your money in the bank, you're lucky to get 1%. You can't live off of that type of money. You could never retire off of that type of money. And again, interest rates are remaining low because they feel it's going to spur on business and more lending and help, build smaller businesses and that type of thing. It just doesn't seem to be working at this time. And, when they come out with these new products on Wall Street, most of the time, people don't understand what they're getting into, and they end up losing their money.
Harold talked about the market when it comes to housing in Toronto. And this week, Toronto home sales plunged under new lending rules. Home sales tumbled in the first month of 2018 as tougher mortgage qualification rules came into play and borrowing costs rose. Sales in Canada's biggest city fell 22% to 4,019 units from a year earlier, according to data released Tuesday by the Toronto Real Estate Board. It was the weakest month of sales since January 2009. The average price of a home in TO is $736,789, down 4.1% from January 2017. Toronto's once hot housing market has been correcting as various levels of government and regulators took measures to curb spiraling prices and soaring debt in the country. Most recently, tougher mortgage guidelines came into play Jan 1, making it harder for prospective buyers to qualify for loans. Many buyers rushed into the market in December to get ahead of of the rules. It's not surprising that home prices in some market segments were flat to down in January compared to last year, said Jason Mercer, the board of director head for market analysis. And he's with the, obviously, Toronto Real Estate Board. At this time last year, we're in the midst of a housing price spike driven by exceptionally low inventory in the marketplace. But even when you take those things into account, tougher mortgage qualification and then obviously a situation where interest rates are going up, it will have an impact across Canada without a doubt. Now, this is an interesting note from Paul Tudor Jones. He believes that inflation is about to appear with a vengeance. He said inflation is about to appear with vengeance and may force a new Federal Reserve chair to accelerate interest rate spikes. And we should mention Janet Yellen is no longer the head of the Fed in the United States. Jerome Powell, he was sworn in during the week. And Janet Yellen did admit she would have liked to have continued on. She said to the President of the United States, Donald Trump, I would like to continue. And Trump went in a different way, getting Powell. Now, the hedge fund manager said the policy has focused on a low inflation problem, and years of near zero interest rates amid economic expansion will have painful consequences. Policymakers should have been more aggressive in tightening policy and rejecting the fiscal impropriety associated with this most recent tax cut, he said. We're replaying an old age story, a story that is very old. The financial bubbles have been played out many times. According to Tudor Jones, he wrote in an article to clients February 2nd, this market's current temperament feels so much like either Japan in 89 or the United States in 99. And the events that have transpired so far this January make me feel more convinced than ever this is a repeat of history. With Jerome Powell coming in, inheriting a U.S. economy and its third longest expansion on record, with the unemployment and inflation near historical low levels, U.S. stocks have tumbled amid concerns that quickening inflation will force interest rates higher. Jones, in the 10-page letter, which was seen by Bloomberg, hinted at a parallel between Powell and the former Bank of Japan Governor Yoshihide Mino, who took to the helm in December of 89 amid a boom driven by speculation in investments in land and stock. Within a week, he began raising interest rates. Mino was ultimately blamed for pricking a bubble over which he had no control. Well, the messenger always gets the blame. The real fault lies in the feet of the policymakers of the late 80s, who allowed systemic imbalances to build up in the Japanese stock and real estate markets. When President Trump talked about tax reform during last week's State of the Union address, Jones said he didn't mention the Treasury auctions will increase this year from the current projection of $583 billion to almost $1 trillion. It is incredible that at full employment, we have passed a tax cut that will push our deficit to 5% of GDP. Can you imagine what will happen to the deficit and debt in the inevitable downturn? That is what the dollar is sensing. And Harold, if he is right, Paul Tudor Jones, and even when we add in and we talk about Carl Icahn, people need to be defensive. They need to watch out what the investments they have today, because going forward, there are landmines out there, as the term we like to use, and you need to be very, very careful.
That's another reason at this point here, what we're trying to do is pick the bottom of gold, or the right time to pick gold. Now, I've always said that, again, we've had to wait for gold to go back into a bullish stance again. So we've seen it trade as low as 1,050. We know the major resistance is 1,380. That's a big spread there. Now, most of this last year or so, gold has traded in the 1,300 range, so really nothing much has happened. We're close to 1,380, or at least we were last week. We get two closes above that, and then the market's going to take off. But you also need to own gold for exactly the reasons that you gave right now, Randy, which was the potential of something blowing up and inflation all of a sudden coming back with a vengeance. So again, we're looking at things fundamentally and technically, but it's important to own gold at these levels, because gold could really take off. If they do something stupid and the dollar does fall substantially, gold is going to take off and run, and then we're going to be chasing it. So again, there's going to be opportunities in gold. And as a hedge against bad things happening, I think it's very important at this time that we start to look at gold again as a potential hedge against inflation and currency changes, and again, as just total protection of our money at this point here. So again, I think at this point here, it's very possible that we could start to see some action in gold again.
And I agree, Harold, because now here is the example I want to give. It's in the chart of the week section of our free weekly newsletter that you can get from Harold, 1-800-432-1022. If you have any questions about the financial markets, your financial situation, speak with Harold personally and privately. He'll be happy to talk with you at any time. The website, rarecoloreddiamonds.com, 1-800-432-1022. Now, this is the example. Nomura Isore for a VIX, and this is the volatility index note, crash that burned retail investors. This is over in Japan. Nomura Holdings issued an apology after investors in a $300 million product betting on low volatility were all but wiped out during this week's stock market turmoil. Japan's biggest brokerage said Wednesday that it has received inquiries from individual investors after its decision to redeem exchange-traded notes at a 96% discount. So you've lost 96% of your money. We sincerely apologize for causing significant difficulties to investors, its Nomura European Financial Unit said in a statement a day earlier. This is what happens, Harold. You have a situation where people can lose a lot of money in these exotic products. And it's interesting note, in this article it says its early redemption, the first of its kind in Japan, was triggered after the notes had lost more than 80% of their value amid the global equity market sell-off. So be careful out there when it comes to these exotic products, because you never know exactly how they work. And once again, even the supposed smartest people on Wall Street that are putting these products together, they don't seem to know how they work. You would think there would be some sort of testing they would do, Harold, back testing, and make sure that depending on different scenarios, someone wouldn't be wiped out overnight. But obviously that's not the case. All they're looking to do is sell a product, make money, and that's just the way it is. But it's sure a tough lesson for somebody who lost 80 to 90% of their money.
Again, most people at this particular point are searching for some place to make money, and just understand that the higher the return, the higher the risk type of thing. So, and do your homework. There's just not a lot of opportunity out there at this particular point, primarily because interest rates are so low. As interest rates go higher, then investments tend to become a little bit safer in the sense that we can make a return on our money. Right now, we can't make a return on our money at all. So it's a difficult situation right now. I feel for a lot of clients out there that, that are floundering at this point here, because there's none of the markets are moving enough to make any major returns. And the higher that the stock market gets, the more risky it becomes. Again, and the best example as to what happened this week, at one point the market was down 1,600 at one time, finished down 1,150 points on the day. The next day was going to open down 500 points, but finished up 300 on the day. That's not conducive to a safe market. That's a volatile, risky market that most people should shy away from. So, again, at this particular point, my strongest suggestion is to remain conservative. The most important thing right now is keeping your money, not putting money into an investment that again is so risky that you don't understand that you could end up losing. So again, at this point, it's just a matter of waiting until the markets tell us that it's time to get back in.
Sometimes that's the best thing to do, is just sit back and wait. It's not easy. People want to be making money now and sitting back and then hearing about your brother-in-law investing in something. And of course, maybe a year later he's lost all his money and you'll feel much better about it. But the scenario is just be patient in these markets, because they seem to be repeating themselves. History, in my mind, very similar to what happened in 1999 with the NASDAQ, but time will tell. Harold's website is rarecoloreddiamonds.com, and he has online a museum of diamonds that are the world's finest investment diamonds you can take a look at. You can speak with him, 1-800-432-1022. The call is free, and anything discussed is 100% confidential. And this week, blue diamond prices are on the rise. The fancy colored diamond market is on the upswing, according to a report, with blue diamonds seeing the largest gains. Blue diamonds saw a 5.9% increase in value in the fourth quarter of 2017 in a year-over-year comparison, according to data published February 1 by the Fancy Color Research Foundation, FCRF. Pink and yellow diamond prices decreased slightly in the same period, negligibly, about 0.8 and 1.8% respectively. The market overall was up about 0.1% in November 2017. Christie sold an 8.67 carat fancy intense blue diamond ring in Geneva for $13.2 million. The reason for this disparity has really less to do with demand than it does with the rarity of the stone, according to Ed Rachmaninoff, who's the chairman of the FCRF. Demand for yellow and pink diamonds is actually higher, but the amount of blue diamonds being mined is decreasing. Almost nothing is coming out of the ground, he says. Pink diamonds have seen the highest gains in the last 13 years, with an overall appreciation of 361.9%, according to the index, which is compiled through surveys and data compiled and provided by manufacturers and brokers. However, blue diamonds began to appreciate at a higher rate of return starting in 2014 and have seen an overall appreciation of approximately 200% since 2005. In the same period, traditional white diamonds have appreciated 27%. Fancy color diamonds are designed as such based on the color saturation of the stone and account for 1 out of every 10,000 diamonds found, according to Russell Shore, who's working with the GIA, Gemological Institute of America. Blue and pink diamonds are significantly rarer than yellow, according to the FCRF's rarity evaluation tool. About 21 to 25 new 2-carat fancy-grade yellow diamonds with very slight inclusions enter the market each year. A pink diamond of the same quality will enter the market once every 3 to 4 years. For blue diamonds, it's once every 8 to 10 years. In terms of investment, however, a blue diamond is not necessarily better than a pink or yellow. Colored diamonds, colored quality, should be the largest determination in a stone's value. An amazing yellow stone can be a great investment, according to Rachmaninoff. New fancy color stones will become increasingly rare as diamond deposits are depleted within the next half century. However, Shore says the market is not entirely dependent on new fine stones that are recirculated through the market to account for what he calls an above-ground resource. And he estimates that approximately 1/4 of diamonds sold in jewelry were previously owned. But whether a fancy colored stone is new or used does not affect its value. Either way, it's a good place to preserve your wealth and leave something for the next generation. However, getting your hands on high-quality fancy colored stones may be easier said than done. While all big jewelry houses invest in them, according to Rachmaninoff, they are rarely advertised online. You have to be invited into their back room. And Harold, good news on the diamond front, with blues up very, very strongly, and just the fact that when it comes to the diamond world, the scarcity level continues to be there, and these stones are very, very hard to find. They're maintaining their value and increasing in value at the same time, which we love.
Blue diamonds have gone up tremendously. We know that because we followed them for so many years now. But again, the rare colored diamond market is a longer-term investment market, but it's a market that holds its value. So that's extremely important when you're investing. One, obviously, we want to make money, but the other thing is that you want the investment that you have to be able to hold its value, and that's what's so significant about the rare colored diamond market. It's got other major benefits also. With the United States the way that it is and a very unpopular presidential situation here, you've got a lot of U.S. citizens that are actually expatriating and leaving the country. Very difficult to leave the country with cash, stocks, gold, that type of thing. Diamonds happens to be the type of asset that is portable private wealth. In no way, shape, or form are we saying, that clients should smuggle diamonds over the border if they're leaving. If you own a diamond and you have the receipt for it, you could travel with that diamond anywhere. It's just when you come back into the country that their customs is going to want to see if that diamond is still there. So again, it's a very important asset. They've increased in value tremendously. You want to buy the highest quality that you can afford. And again, blue diamonds, pink diamonds, flawless yellow diamonds, they've all done well and will continue to do so. We're very excited about what's happening in the rare colored diamond market. We own 2 different auction sites, and we are going to start to do our auctions again. We had to rebuild both of them because the technology has changed so often and so quickly. But again, we're excited to get back into the auction business. And we have some beautiful diamonds and other products to auction off. So stay tuned, and we'll certainly let you know when that's going to happen. It should be fairly quickly.
Speak with Harold about hard assets, diamonds, gold, silver. The website, rarecoloreddiamonds.com, 1-800-432-1022, rarecoloreddiamonds.com. Before we end the show, a couple of notes, and we've talked about it before. We're really keeping an eye on the flu. A nasty flu season means workers are staying home, and it's costing employers a bundle. They're actually saying, Challenger Gray and Christmas, that about $15.4 billion, and it has killed 53 children in the United States. The firm estimated that the flu season could cost businesses $9.4 billion in lost productivity, and we have some stories in our free weekly newsletter why the vaccination really has not worked that well in the United States and around the world. The flu vaccination, and we have another article, the flu for influenza viruses, imperfection is strength. You can check those articles out. When I was a little kid, and I do remember this well, watching Hockey Night in Canada, there was a very special game 42 years ago as of yesterday, Wednesday. We're taping on a Thursday. And it involved Daryl Sittler, had 10 points in a hockey game. And I remember watching it as a kid. It was big news. And one of the stories that came out this week, Daryl Sittler's record-setting jersey resurfaces after 42 years. The Migrate Group gave their stamp of authenticity on the jersey last Friday, just days before the 42nd anniversary of the historic night at Maple Leaf Gardens. All these years later, Sittler himself said he wondered. He did not know what happened to it after he took it off that night. He said in a text message to TSN, it was good to hear it turned up again. Sittler was in attendance at Air Canada Centre on Wednesday when the Leafs, they hosted Nashville and they won in a shootout. The story goes that the Leafs owner Harold Ballard gifted it to someone after the game. It remained in private collections for 42 years, changing hands 4 or 5 times before it landed with the Migrate Group. And it's interesting to note Paul Henderson's game-worn jersey from the 1972 Summit Series. It brought in $1.27 million in 2012. And Barry Meisel, president of the Migrate Group, estimated Sittler's jersey, Harold, could be worth 25 to 50% of that. So they're saying it could be worth $350 to $500,000 US dollars.
Absolutely blows me away that Sittler's jersey could go for $500,000. Now, I was at the game when he scored those 10 points. And I always was a big fan of Sittler. In fact, I've got one of Sittler's jersey hanging in my, in my home. But I'm just shocked at that price. Again, there's no guarantee it's going to hit $500,000, but just the fact that it's being possibly appraised at that level just goes to show you that hockey is well. And the memorabilia is selling at high prices. That's fantastic. I would love to see his shirt sell for that price. That would be phenomenal.
Well, according to Meisel, who's been collecting for more than 3 decades, this is a top 3 find. And they're looking to sell the jersey and considering all options. And I would imagine they're hoping that somebody will buy it and maybe donate it to the Hockey Hall of Fame, where ideally that would be the perfect place for it. But yes, congratulations to Daryl Sittler. I was never a big Toronto Maple Leaf fan growing up as a kid, but I always thought very highly of Daryl Sittler. I just thought Daryl Sittler was one of the greatest of the greats. He was just amazing.
He certainly was. But I grew up as a Leafs fan. I remember going to Maple Leaf Gardens as a kid, and even on Saturdays when I was 10 or 11 years old, 12 years old, we could take the bus to College Street and the streetcar over and watch the Marlies play every Saturday and come back with a bunch of pucks. It was so much fun. That's when life was simpler and safer. There's no way in the world that you're going to send an 11, 12-year-old kid, to do that today. But growing up in Canada at that point, it was a much safer, lifestyle. And, I was always a Leafs fan with Johnny Bower and Mahovlich and Keon and Eddie Shack. And, I'm 64 now, so back in those days, it it was just a great time to be a Leaf fan.
I remember as a kid, we always thought Harold Ballard was crazy because he traded away Lanny McDonald and Tiger Williams. I loved Tiger Williams when Tiger would ride the stick, but Lanny obviously ended up in Calgary, and Tiger Williams was in Vancouver with the Canucks in my province where I grew up, and it was just a fun time. One of the things I really remember with the Toronto Maple Leafs, and I was bringing it up to somebody the other day, and they did not remember it, and it was not big, but it lasted a very short period of time. Toronto was trying to win, I believe it was a playoff series, Pyramid Power. Do you remember Pyramid Power, Harold?
I'm trying to think.
Remember they had the pyramids under the bench. They put pyramids under the bench, trying to give the Leafs a psychological advantage because they were calling it Pyramid Power. I'll have to dig that up and put it in our newsletter, but I remember as a kid watching Hockey Night in Canada, Toronto play, and they had the pyramids, and I think it was Harold Ballard who concocted this crazy scheme of Pyramid Power. And the pyramids had power, and under the bench they were going to give the Leafs this extra boost. But what a crazy time it was back in the 70s when it came to hockey. I just love hockey today, but looking back at the old games, they don't have all the equipment and the players. It was just a very different time, but I just love it because that's what I grew up with, as you did.
Brings back great memories. I remember going to Jim Pappin's hockey school, playing hockey with Bobby Orr and Brad Park. Played hockey till I was 45 years old here in the States even. So I love hockey and always will, and it's good to see that hockey is doing well, with some great new players, Connor McDavid and Austin Matthews, and hockey is exciting. I grew up in the era of Bobby Hull and Gordie Howe and all those guys, but it's good to see we've got some young superstars that are keeping the game real and enjoyable for all of us old-timers.
My favorite player, and controversial for some, Bobby Clark. I was a fan of the Philadelphia Flyers, and I'm an Oilers fan now, having lived in Edmonton for so long, but that was one of the jerseys that they found as well, a Bobby Clark jersey. And back in those days, they wore the jerseys pretty much all season. It wasn't as if they were getting a new jersey every game or every few games or once a month. They pretty much wore them all season long, and they have a Bobby Clark jersey that they found. Harold, thank you for your knowledge and another outstanding podcast.
It's my pleasure, Andy. I wish everybody a wonderful weekend and a very profitable day.
Any questions on your mind? Speak with Harold about investing. 1-800-432-1022. His website is rarecoloreddiamonds.com. rarecoloreddiamonds.com. 1-800-432-1022. Get our free weekly newsletter, the companion to the podcast with all the stories that we talk about, and we'll be happy to send it out to you. That's it. Another edition of the World Financial Report podcast with Harold Siegel and me, Randy Marshall. We will talk to you next week.